Hello everyone, Tony here. Today we're going to talk about an ETF. Normally ETF is not on my list, but people complain it's too expensive to get tech stocks right now, and they're also afraid the market may crash. So I pick out this ETF that behaves much better than the overall nasdaq, especially in a weak market. If you don't want to leave the market right now but are afraid it's going to crash, then getting this ETF will lower your risk significantly while still give you good returns. Before we start, please click that ravishing like button. That's the only thing I ask for making this video. This ETF we're talking about today is VanEck Vectors Video Gaming and Esports, ticker symbol ESPO. This ETF behaved well after the March crash, kept going up until the September crash. ESPO gives a chance for small investors to get their hands on some hot but expensive stocks. For example, Nvidia. The price is over $500 per share now. If you don't have a lot of money and didn't use it well, you might use up all your bullets before you really need them. Almost no room for any mistake. Well, let's take a look at the risk first. Number one is overall performance. If this ETF can't outperform the NASDAQ, then why should we buy the ETF? We can just buy the NASDAQ QQQ. That's a lot safer, right? Second, people are thinking when COVID gets controlled, everybody is going to be back on street. Nobody stays home and play games anymore. And third, government regulations can sometimes really affect a gaming company or the entire gaming industry. And fourth, this is not a huge ETF. The assets were only like 470 million, not too big. The volume, not too big either. So those are the four risks. At the beginning of the video, I said this ETF has significantly lower risk than the tech stock itself. Let's take a look at its performance versus QQQ in the September crash. Well, QQQ is an ETF tracking NASDAQ 100 index. I talked about it a lot more in a video earlier talking about supporting levels. If you're interested, you can go take a look. Here we can see the performance of ESPO beats QQQ in the recent crash. Well, some people might say, hey, it's just a one-time thing. It could just be a coincidence. Well, if we take a look at the historical meltdown happening in March, we can see that there's still a 10% difference in the performance. That's a huge difference. Well, on the returning side, the return rate this year, ESPO is almost twice as much as NASDAQ. Some people may think COVID trapped people home. That's why gaming industry thrived. True, it is one factor. But even if you start looking at it from October 2018, the 2-year return rate of ESPO still beats that of NASDAQ by almost 45%. The gaming industry has been outperforming NASDAQ and is going to keep on doing so. This is a consistently high growth industry. It won't slow down after the pandemic. It became a sport and more professional. Thus, ESPO is very charming even after the COVID. The next risk is government regulation. That's actually quite important. There is a chance that the companies get into trouble developing a game violating some people's value, got criticized, or even in law trouble. There's also a chance the game platform might be affected by Apple Store policy. It's exactly the reason why we didn't choose to buy a gaming company stock. This ETF contains the whole industry: hardware manufacturer, gaming companies themselves, gaming live show companies, etc., that's going to be easy money. We can see the game market forecast from 2018 to 2022. Annual growth is 9%. Not as great as some of the new areas like Tesla, but for a pretty mature industry, this is very good. In 2020, competitive video gaming are expected to have 495 million audience. Esports revenue has been growing almost 28% yearly since 2015. Here is a graph illustrating 2020 game market. The total revenue reached astonishing $159 billion, 9.3% more than last year. Mobile gaming and smartphone gaming contribute the most, 13.3% and 15.8% respectively. I don't have to emphasize how much money smartphone gaming can make. Very little investment with huge returns. The only game going downhill is browser gaming. Its percentage went down 13.4% because it's in an awkward position. Not as convenient as mobile device or smartphone, yet incomparable experiencing with the AAA games on PC or on console. ESPO only includes companies that derive at least 50% of their total revenue from video gaming. Therefore, all those growth we saw on this graph will affect ESPO. So long as the gaming market increases, this ETF will keep on increasing. Now let's take a look at ESPO's components. This is the top 10 stock it's holding as of September 14th. Together, they are over 60% of the entire portfolio. You can see they own Nvidia the most, about 9%. Then Tencent and AMD, each 7.7%. Nvidia produces video card and AMD produces CPU, both critical hardware for gaming. Containing those two stocks is one big reason I chose this ETF over some other gaming ETFs. Keep going down the list, you'll find major companies in a lot of different countries, like Nintendo, Sea, Blizzard, Bilibili, etc. In their portfolio, there are about 35% of US companies, 20% Japanese companies, and 18% of Chinese companies. A few other European countries are each below 10%. The net expense ratio for them is 0.55% per year, relatively low even for an ETF. And one last thing, ESPO is a relatively small ETF with only about 470 million asset, and daily average volume is only about 180,000, not very big. To summarize, with the uncertainty we are facing, ESPO is definitely a good choice, especially if you're a rookie investor but still want to stay in the game. I gave a B on its growth simply because it's an ETF. It's hard to beat a stock if it bursts out. However, this also helps minimize the risk when that stock crashed. As usual, I gave my get-in price for reference. If you're afraid to miss the opportunity, get in anytime. And 55 to 60 would be a reasonable price to get in. Below 55 is dirt cheap. And if it's below 50, man, it's a steal. If you find the video is helpful to you, please subscribe and click that little bell image if you want to get an instant update message. Okay, thank you very much. See you next time.